All right. Welcome, everybody. Good morning, good afternoon, wherever in the country or wherever in the world you happen to be. I'm so glad you're here. Today's webinar is Navigating Tax Season Without Losing Your Peace. I know it's everybody's favorite topic. Tax season can be especially stressful for pastors, and hopefully today we're going to demystify some of why that is, and perhaps more importantly, give you some things that you can do, some low impact um, things that you can do to increase your peace and make it more, um, more of a situation that is um, that you can get a handle on, right? So this is going to be a 60-minute webinar. Let's just jump right into it. I promise to make it as painless as possible. Um, I'm going to start by talking about why tax season feels so different for pastors. And I want to start by saying you're not imagining it. It really is more complicated. There is no one in the entire tax code that occupies the same space that you do as a pastor. And so I want to just say that right off the bat, that it really is different. 90% of pastors report financial stress. That is not a number that speaks to individual failing. That is a number that speaks to a systemic issue. Generic advisors often miss clergy-specific rules, and there are many of them. I would need two hands, at least, to tell you all of the IRS provisions that apply only to pastors, and it turns your financial situation completely on its head. And even experienced CPAs and tax professionals can get it wrong. It's very niche clergy taxation. And so even if you're working with a CPA, I've seen CPA prepared returns for pastors that, make fundamental mistakes because you got to know what you don't know. And hopefully by the end of this webinar today, you will be equipped to be able to talk to your tax preparer, or if you prepare your own taxes, to be able to know what exactly you should be doing to ensure that your taxes are being done properly. So to frame this isn't about stewardship or discipline, right? That's not the problem here. The problem is that your situation is really different and maybe no one has told you exactly how or exactly why. And you're probably being gaslit by a system that was never actually explained to you. So again, we got 60 minutes. I'm going to do my best to make this as simple and as accessible as possible. And most importantly, to make sure that you are able to navigate this system or this season, excuse me, with peace. So there's also an underlying belief that a lot of pastors have, and the belief kind of goes like this. I should be tax advantaged because of my housing allowance, so why do I feel like I'm paying so much money in April to the IRS? And there's a simple explanation for that, but it's one that maybe you've never heard before. And the reality is that at low to middle incomes, your dual tax status as a pastor, and we'll explain what that means in a minute, but that means you often pay more in total taxes even than secular employees. And that's even taking into account the housing allowance. At the median pastor salary, which was about 59,750 bucks or something in 2024, if you assume a 30% housing allowance, a pastor's paying roughly $1,600 more per year in taxes because of that dual tax status. That's even taking into account the housing allowance. So it really is a system that can inherently disadvantage you as a pastor. But the good news is that you as a pastor have more levers to pull with proper guidance and planning in order to turn that disadvantage into an advantage. And so that's my heart for you pastors here today. So again, you're being gaslit by a belief that says that you should be doing better. I have a housing allowance. I don't pay taxes, quote unquote, as a pastor. Why does it feel like I can't get ahead? Why does it feel like I can't save for retirement? Why does it feel like I can't maintain an emergency fund? Well, some of it is due to the fact that you are in a tax situation that makes it harder for you to get ahead. But I'm here to empower you today with ways that we can turn that around. So let's get into it. So here's my goal. By the end of this hour, you'll understand why it's been confusing and you'll have a clear path forward. You're going to understand how you're taxed differently, how to find help that actually helps you. We're talking about tax preparers, CPAs, people like that, and also some simple habits that you can start implementing today that will prevent April anxiety every single year. All right, so that's our scope today. And let's talk with part one and talking about the three big differences. Again, I would need two hands to give you all of the IRS provisions that apply only to you, but I've boiled it down to the main three. Now, if you can understand these three, then it will really help you to grasp the essence of what makes you different. And this will put you probably 80% ahead, or ahead of 80% of the pastors that don't understand these three differences of why clergy taxation is absolutely unique. And we start with this term that I've talked about a little bit before, what I call a dual tax status. And so what that means is that you occupy a unique space in the IRS code where you are both an employee of your church, but you're also self-employed at the same time, right? So it's genuinely confusing. There may be some niche wonky case that I'm not aware of, but as far as I've been able to find out, pastors are the only occupation that occupy this space in the tax code. So this is what it looks like. So for income tax purposes, you are considered an employee. So you receive a W-2 from your church. That's what employees get for wages that they receive from their employer. And your employer is your church. You're working essentially at the direction of your church board or whatever governing body your church happens to have. So you are an employee for income tax purposes, but when it comes to Social Security and Medicare, you are considered self-employed. Now, you don't pay FICA tax like everybody else. Most people, when they get their W-2, almost everybody who gets a W-2 will see FICA tax being taken out. Now, that's 7.65% that's being taken out of their paycheck, and then their employer will match that. They'll pay 7.65% on their own, and that gets you up to the full 15.3% that pays fully into Social Security and Medicare for you. However, as a minister, you are treated as if you are self-employed for Social Security and Medicare purposes. So that means that that full 15.3% falls in your lap, and you're not governed by FICA, you're governed by SECA, which is the Self-Employment Contributions Act. And so your church actually is not allowed to withhold self-employment tax on your behalf. That's 100% your responsibility, as if you were a small business owner. I know no one got into ministry wanting to be a small business owner. You went in to help people, and you just wish that it was easy and that it wasn't complicated. But I'm here to show you that it's hopefully not too complicated if we can get you up to speed with the actual differences. So what does it actually mean to be self-employed? I got ahead of myself a little bit, but regular employees will split their Social Security and Medicare tax burden with their employer. And it's just 7.65% on every dollar that you make. It's not complicated at all. It's essentially a flat tax. Every dollar you make, either as an employee or what have you, is going to be subject to that 7.65% tax. And their employer will withhold that for them. But you pay the entire 15.3% yourself. So not only are you having to pay essentially both sides, we call it, the employee side and the employer side, not only do you have to pay both of those sides yourself, but you have to be responsible for actually making sure that that gets paid throughout the year, because it's likely not being withheld by your church paycheck. All right, so this is on all ministerial income, by the way, and that's including the housing allowance. That may be bad news for some of you, but your housing allowance is not a tax-free benefit. It is actually subject to self-employment tax. So every dollar of your housing allowance is being taxed at that 15.3% rate. The effective rate is actually like 14.1% when you factor in the business owner deduction, which is interesting because you're not really a business owner. So it's all very confusing. But this is usually not withheld from your paycheck, as we talked about before. We're going to talk about ways that we can mitigate that down the line. So that's the first difference that makes you unique, is that you have this unique dual tax status where you're taxed two different ways. And the second big change of the three changes is the fact that you have a housing or a parsonage allowance. So this is your most valuable tax benefit, but it's also your most understood. So I'm going to get into the details here and try to break it down best I can. Keep in mind that there are two types of benefits here. There is a cash housing allowance. If you rent or own your own home, and your church has designated a portion of your pay to go towards housing expenses, that's a cash housing allowance. And that's what we're going to be talking about because that's the more complicated situation. You could also be in a situation where you're in a church-owned parsonage. And we're going to be talking about that in a minute, so hang tight. But a lot of this won't apply to you. I'll talk to you specifically in a minute if you own a church, if you live in a church-owned parsonage, and what that means for you tax-wise. But if you receive a cash housing allowance, this is how it looks. You have a three-part test. Right, I like to think of it as a three-legged stool. You can only sit as high as the shortest leg. And in the same way, your actual tax benefit you can take for your housing allowance is the lower of three values. And these values can change. They're unique every single year. So you should be updating your housing allowance every single year. I'll quickly go through what the three things are, and then I'll go back in detail and talk about each of them. So the first part of your three-part test is the amount designated by your church. So this is where, say you make $60,000 at your church and you've designated $30,000 of that as housing allowance. You should have that in writing from your church as some sort of resolution that says, we've designated $30,000 of your annual wages to be housing allowance. That is not subject to income tax, but it is subject to self-employment tax like we talked about before. So that's one of the legs of your three-legged stool. The other are your actual housing expenses. So you can't take a greater tax benefit than the actual expenses that you've paid for housing that you can substantiate. And then your third leg is something called the fair rental value. And this is a calculation that says, what is the fair rental value of the place that you're living in, furnished plus utilities? Now, this third one is the most misunderstood from what I've seen. And good luck trying to find any IRS guidance that'll show you exactly how to come up with this number. A lot of people are just scratching their head and just kind of make it up, right? I do have a free housing allowance tool. I put a QR code on there. You can also get there by going to my website, shepherdswallet.com, looking at the tools and resources section, and there's a housing allowance estimator or a housing allowance tool. And the website that this takes you to will actually include a video walkthrough of me using the tool and showing you how to research your place and find a good fair rental value estimate. All right, so I'm going to put that up there on the screen now. I recommend that you give that a look. But let's go back and talk about these three. So the amount designated by your church, this can essentially be whatever you want it to be. You can, and a question that I get a lot is there a limit to how much of my compensation from the church can be designated as housing allowance? Can it only, be 50%? Can it be 100%? And there is no statutory limit to how much of your wages can be housing allowance. It could be 100% if you wanted it to be. And there's nothing illegal about that. There's nothing wrong about that. It might be unwise if you're relying on your church to withhold any income taxes for you, because they're only going to be able to withhold income tax on the wages portion of your compensation. So if you think of your total church compensation, you have your housing allowance portion, and then you have your wages portion. Right, it's a zero-sum game. So it's like if you designate a higher housing allowance with your church, it's not like your church is giving you a raise. It's just taking from one pocket and putting in the other, right? So there are some church boards that have this idea where it's like if the pastor is asking for a higher housing allowance, they're asking for a raise. That's not the case. And if your church doesn't understand this, then you can help educate them and be like, I'm not asking for more money. I'm just asking for a certain portion to be treated differently for tax purposes. Has nothing to do with how much the church is giving to me. Right. So this is something that you should be updating every year around November or December, whatever the last board meeting is that your church has in the calendar year. That's a perfect time for you to ask for an updated designation for the following year. And the reason why is because there's no reason why this leg of the stool should be the shortest. There's no reason why this amount designated should drag down your tax benefit. And I'll show you some hard numbers in a minute to see what this might look like in practice. But you should be able to ask for exactly how much you want here. And again, there's no reason why it should be lower than it needs to be. All right, actual housing expenses. Again, the housing allowance tool is going to help prompt you on the expenses that are allowed. There are some debates as far as what actually is allowed. There are some things that are hard and fast, like for instance, the IRS has come out and said that, housekeeping, house cleaning services are not allowed to be included, but you can include things like lawn care. And maintenance and things like that. But the actual list of expenses that you could choose could be pretty long. And I try to have a comprehensive list on this free tool. It's an Excel tool that you can use, and you can put in your actual expenses. So again, now for this one, um, let's talk about how these two interact, the amount designated by your church and the actual housing expenses. A lot of pastors that I talk to consider the designation from their church as sort of like a spending uh, target almost. Say in that same situation where $30,000 is designated as housing allowance. Well, now I have to spend $30,000 on housing. And so they get to the end of the year, they've only spent $25,000 and they're like, oh, I need to go buy some furniture, or I need to do this to use up my housing allowance. And I would challenge that thinking, and thinking that the housing allowance is not like free money that you have to spend. It's really just a discount. It's Okay, let's talk about hard numbers. A lot of pastors are in the 12% tax bracket for federal, and I'm not going to consider state. Let's just talk about federal taxation. So if you're in the 12% tax bracket, what that means is that your housing allowance essentially gives you a 12% discount on all of your housing expenses. Now, if you were to receive in the mail a coupon for 12% off at Ashley Furniture or something like that, are you going to take that 12% coupon and be like, hot dog, I'm going to go and I'm going to replace every single piece of furniture in my house? Well, no, you're not going to do that because you're still paying 88 cents on the dollar for that furniture. And if you don't need it, then there's no reason to replace all that stuff, right? It's nice to have that coupon if you need furniture. So if you're in the market for furniture, it's like, okay, I got a coupon. That's awesome. But you don't take the coupon and then go and make sure that you spend as much as you can to take advantage of that coupon. That would just be poor stewardship. That wouldn't be smart. So that's how I would challenge you to think about the housing allowance. It's not a spending target, like I have to spend $30,000 or $50,000, otherwise I'm leaving money on the table. You're not. You're just choosing not to utilize a portion of your 12% in this example of your 12% coupon, right? You're still paying 88 cents for everything that you spend. So it doesn't make sense to create new spending that you don't need. Anyway, by the way, I do these webinars quarterly. And so at this time of year, I do the tax webinar. I talk about the housing allowance more in depth in my webinar in November. All right. So if you're registered for this, then you'll be on my mailing list and you'll be up to date on my free webinars as I do them every quarter. And then this third one, fair rental value, furnished plus utilities. Again, there's no reason why this should be the lowest leg on your stool. Usually this is the highest one. And if you do it right, you can justify a pretty high fair rental value. All things being equal, you'd like this number to be as high as it can be and still be compliant. I see a lot of pastors underestimate this. Essentially, they'll go to Redfin or Zillow. You can look up your house and look up the Zestimate or whatever rent estimate they have, and they'll just take that and multiply it by 12 and call it good. But that's severely underestimating because the IRS um, provision specifically says the fair rental value of a furnished residence plus utilities. So what that means is, when you look on Zillow or Redfin, they're giving you the unfurnished version. They're assuming that it's not a furnished residence. And so you have to add a premium, typically like, 15 or 20% to get to a furnished premium or a furnished rent. There's also stuff, resources like furnishedfinder.com. The housing allowance tool, the video will kind of show you how I use that, where you can get good comps for a good furnished residence, and then you add your utility costs on top of that, right? So this should be as high as it can be for you. There's no reason why this should be the shortest leg. And in many cases, if it is the shortest leg, it usually means that your spending is out of control, and we should probably bring back the spending on the housing. All right, so again, that's your three-part test. You can take, again, the lower of whatever these three are for every year. Again, think of it like a three-legged stool. You can only sit as high as the lowest leg between the amount designated by your church, your actual housing expenses, and this fair rental value calculation. Now, again, housing allowance saves you only on income tax. You have two types of tax. You're paying income tax, which is the progressive tax system. You have the tax brackets and things like that. And then you have your Social Security and Medicare taxes. Those are two separate systems, and only the income tax is what the housing allowance saves you. It doesn't touch self-employment tax. So if you have not opted out of Social Security, you should be paying the full 15.3% on your cash housing allowance. Um, Housing allowance is not tax-free. Now, I promised I would address if you lived in a church-owned parsonage. This is kind of the rub here. This three-part test doesn't exist if you live in a parsonage. Really, your church is going to give you your fair rental value estimate, or at least they should every year with your tax documents. And then you put that in, and then you'll be paying your self-employment tax on that amount. So, yes, it's a free benefit, like you don't have to pay rent to live in your parsonage. However, you do have to come out of pocket to pay your taxes on that benefit, that 15.3%. And again, that's if you haven't opted out of Social Security. And we'll talk about that a little bit in a minute too. Anyway, so let's look at some examples, just some quick ways to optimize your benefit. Again, we go into this more in detail in the November webinar, but since this is a hot topic that a lot of pastors want to talk about, I want to talk a little bit about the housing allowance. So here's one example. All right, so let's say your three values, you have a $20,000 designation from your church. You know, your housing allowance is $20,000 of your pay. You have $30,000 in total housing expenses, and then your fair rental value estimate is $35,000. So you see that black line across the top that shows the lowest of the three. That's the actual tax benefit that you can take. Okay, so if this happens to be your situation, what this tells me is that you have at least $10,000 of unused benefit, right? The designation is an arbitrary number. You can go to your church and ask for, if you make $100,000 from your church, your housing allowance could be up to $100,000. You can ask for whatever you want. And so there's no reason why you could have asked your church for $30,000 or, $31,000 in case, or $35,000 just to make sure you capture your entire benefit. So in this situation, you have $10,000 of unused tax benefit and you're overpaying in your taxes. So your action step here is you should request a higher housing allowance, because the designation, there's no reason why that should be your lowest leg on the stool, because you and your church have complete control over that. Let's look at another example real quick. So in this scenario, let's say that you did dial in your designation and your expenses are spot on. You did a good job estimating your expenses for the year. You spent $35,000. You asked the church for $35,000. That looks great. However, your fair rental value is $25,000. And so what this creates is what's called an excess allowance, and that's taxable, right? So you have $10,000 difference, and that becomes now taxable income that you have to pay income taxes on. So what this tells me is that I would take a very, very close look at that fair rental value estimate, because again, it's probably low. Maybe you just went to Redfin or Zillow and you just looked at their estimate and you multiplied it by 12 and you called it good. You didn't add in a premium for furnishings and you didn't add in your actual utility costs. Both of those things can bring that up. This is very rare where you would see the fair rental value be the lowest leg in the stool. And so when I see that, the first thing I want to do is I want to do a little bit of comp analysis and say, look, can we get that fair rental value up? Because again, we don't want, there's rarely any reason why we should have excess allowance. And then if it is legit, if the fair rental value is properly designated and it really just happens to be lower than your expenses, then I would consider, reducing your designation down to that $25,000, or really getting a handle on those expenses and getting those done. Right. Okay. Some common mistakes that I see with housing allowance all the time. Not requesting enough or requesting too much. We talked about this already. Retroactive designation. You can't go back and say, hey, I want my housing allowance to change back in the past for, it can only be from this moment on. So I recommend having it every November or December, updating it for the next year just to make it nice and clean. However, if you have a change in your housing situation mid-year, you can go back and change it mid-year. You can change it anytime with your church. It's just going to apply from that paycheck on for the rest of the year. You can't go back and retroactively make changes. Poor documentation, like, I think I spent about $30,000 on housing expenses. Makes an unnecessary audit risk, because if you get audited, they're going to want to see receipts, and you may have to pay all that back if you have no way to substantiate that you actually made those expenses. It also probably underestimates your benefit too, because you may be actually incurring expenses that you're not capturing just by hand waving it away. And again, the third part of this presentation, we're going to go over some easy record keeping ways that it's going to make it a cinch to keep track of all of that housing spending, so there's no excuse. Um, Housing allowance included in box 1 of W-2. So this is a payroll error that I see churches do all the time. And one of the biggest mistakes that I see is, tax preparers, or, yourself, if you're self-preparing, you don't know what to look for in a pastor W-2 to make sure that it's done properly. I've seen churches withhold FICA tax for their pastors. And if you remember, pastors are not subject to FICA tax. They're subject to self-employment tax, so they shouldn't be withholding anything. So that's a whole rigmarole trying to claw that money back for the church, and then you have to pay out of your pocket for the rest anyway. So, this is one of the biggest errors I see, is payroll errors from the church. And so one of the easiest things to look at is just look at the box 1 at the top where it says total wages. Make sure that does not include your housing allowance. It should not include your housing allowance, and it should not include your 403B contributions to your church's retirement plan. Anything left over, that's what goes in box 1, and that's what's subject to income tax. All right. And then finally, it's underestimating the fair rental value limit. I see this all the time, and it's just pastors leaving money on the table. So let's get that dialed in. Okay, so those are two of the three big changes or big differences in pastor taxes that make you a unicorn compared to everybody else. The third is the opt-out decision, right? So for those of you that aren't familiar, as a pastor, you have, again, as far as I know, a unique ability to choose to opt out of paying self-employment tax. So that 15.3% that we've been talking about, maybe a lot of you have been confused because you've opted out and you're like, I don't owe thousands of dollars every April. My housing allowance is a tax-free benefit. You don't really, you're not tracking with me. What this does is this decision leads to two completely different tax lives. Even within the highly specialized world of clergy taxation, there are two kind of subcategories that are taxed and treated completely different. So if it wasn't different enough, now we have two archetypes within clergy taxation. And it comes down to this question: did you opt out of Social Security? For those of you that don't know, pastors have a 2-year window from when they start receiving money for ministry services. From there, that starts a clock for 2 years, and then there's a window. You can choose using Form 4361. You can go look it up, and you can choose to opt out of Social Security. So if you're outside that two-year window, whatever decision you made or didn't make, that's irrevocable. That's an irrevocable decision that you make one time in your career, and under current law, you can never take it back. Um, I find it kind of a travesty that we're asking 20-year-old kids out of seminary to make decisions that are going to affect their family for 40, 50, or 60 years, but them's the breaks. I generally recommend against it. You can reach out to me. I have my email and address that you can reach out if you have questions afterwards, or at any time you can drop questions in the chat. I'm going to have a Q&A session at the end of this, by the way. So if you'd like to ask questions along the way, feel welcome to put them down. I got my chat right here, and I can see what you're asking, and we'll have a time at the end I can answer your questions, those of you that are here live. But I can talk about this more, the reasons why I recommend against opting out. But again, it's an irrevocable decision one way or the other, and it makes two completely different personas within clergy taxation. So if you have not opted out, then that means that everything I've said so far applies to you. You're paying your self-employment tax on all ministry income, including your housing allowance. You probably need to be making quarterly estimated tax payments, and we'll talk about that in a minute and why that's important. And you are building Social Security benefits for yourself and for your family with your ministry income throughout your career. Now, if you have opted out, or if you're considering opting out, you don't pay any self-employment tax at all. So that 15.3%, it's gone. You don't pay it on your housing allowance. You don't pay it on your wages. You don't pay it on your, weddings and funerals and honoraria. All of your ministry income is exempt from having to pay that 15.3%. However, And that means you probably don't need to be making quarterly payments. You're probably not paying much in taxes at all because, for a non-opted out pastor, you are saving probably in income tax because of the housing allowance or the parsonage allowance, but you're making up for that and probably and some on top of that for your self-employment tax burden. So it kind of does this. If you've opted out, you get the same income tax benefits, but your self-employment tax has gone away completely. So you have probably a artificially low tax burden, but that's a double-edged sword because you must replace the benefits that you've given up through Social Security and Medicare yourself. Again, my next free webinar is going to be in May, and that's going to be specifically on retirement planning for pastors. And I'm going to be talking about this specifically. If you are an opted out pastor, what you need to be doing to replace those benefits. And there's actually a QR code here at the bottom. I wrote an article all about steps that you can take to start replacing your benefits if you have opted out of Social Security. So if you've opted out, then you have traded um, tax stress every year because your tax situation probably isn't that stressful because you're not paying a lot in taxes, but you are trading that for retirement planning stress because you're really going to have to take uh, control and really take seriously your retirement planning because let's be honest, we all know those pastors who have opted out and who are now, late 60s, 70s, mid 70s, late 70s. And, they've opted out. They don't have Social Security. They don't have Medicare. They don't have SSDI, disability insurance. Their spouse doesn't get spousal benefits. They're realizing what they've given up and they're realizing that perhaps they haven't, uh, you know, replaced those benefits and they really have nothing and they're facing retirement poverty. I think that's a travesty, and I'm trying to do my best to prevent that from happening as far as it relates to me. Okay, so talking more about this opt-out decision. If you haven't opted out, again, quarterly estimated payments are essential. We'll talk about this more in detail in part 3, but there are 4 times in the year where you should be paying about 25% of your total estimated tax burden. April 15th is the first one, then June 15th, then September 15th, then January 15th. I am also self-employed, and so I'm in the same boat as you. I have my calendar marked on the 10th of all of those days. So I have it marked on April 10th, June 10th, etc., reminding me to pay my estimated taxes before the 15th. Again, I'm sorry that you're in the world of self-employment and in the world of essentially having to think like a business person, but that's what the IRS has put on your lap. Your pre-tax 403b contribution reduces SECA tax, and this is huge. I know that everybody talks about the benefit of the housing allowance and what that means tax-wise. An even bigger benefit potentially, if you haven't opted out, is making pre-tax contributions to your 403b through your church. And that has a variety of other benefits. Again, we're going to do a deep dive in this on the May webinar when we talk about retirement planning. But if you're wanting to save in self-employment taxes, which for many non-opted out pastors is your biggest tax burden, really be leveraging your pre-tax, specifically your pre-tax contributions to your 403b. I know that a lot of pastors are doing Roth conversions, and none of this is investment advice, by the way. I'm just talking about how it works with taxes. A lot of pastors are doing Roth contributions, again, because your income tax is low. So it makes sense, let's pay a little bit of tax now and earn tax-free growth in the future. It makes a lot of sense, but don't sleep on this unique benefit that only pastors get, which is you can reduce your Social Security and Medicare taxes specifically with 403b contributions to your church. You can't do that with a pre-tax IRA. You technically can't even do it with a pre-tax 401k. Some churches have a 401k and they treat it this way. However, the only compliant way to do it, according to the strict IRS language, is if your church has a 403b. 403b9 especially would be nice because then you're not subject to ERISA and government oversight. But again, the May webinar, we talk about this more in detail. Your housing allowance is still subject to self-employment tax. So again, it's not a tax-free benefit for you. You're having to still pay that 15.3%. And you are building towards Social Security benefits. Now, if you have opted out, You probably don't need to be making quarterly payments. Your withholding from your W-4 with your church is probably covering your income tax if you pay any income tax. Some pastors I know, especially associate pastors that have, middle to low incomes, if they have opted out, you might be paying $0 in taxes every year. Now, if you have opted out, I might consider Roth in this case over pre-tax 403b. Maybe your church has a Roth option in their 403b, and that would be stellar. But Roth becomes more of something to think about because, again, you don't get a self-employment tax deduction for your pre-tax contributions because you're not paying self-employment tax. And so then it might make sense to leverage your income tax, favorability in order to just lock in that tax-free growth, right off the bat. You must replace your Social Security benefits yourself, and retirement planning is critical. Again, there's the QR code. You can look at the article that I wrote specifically for opted out pastors and what you can do. Okay, so that's the first part. Big three changes or big three differences in your taxation. You understand these three, and you're going to get most of it. First, you have a dual tax status. You are an employee, so you get a W-2, but you're also taxed as if you're self-employed, so you have to pay SECA taxes, right? So there's the dual tax status for you. Two, you get a housing allowance or a parsonage allowance, which has its own unique situations with how it's taxed. It is tax-free for income tax purposes, but it is not tax-free when it comes to self-employment. And so therefore, it's really, really important to optimize that. And then the third is whether you're opted out or not, you have completely different tax planning needs. All right, so let's talk about part two. This is how you vet your tax preparer. And if you do your own taxes, we're going to have some litmus test questions that you can ask yourself to make sure that you understand how to do your own taxes. And if you have somebody doing it for you and you're not 100% sure that they know what they're doing, I've narrowed it down to 5 questions that can show very quickly where the deficiencies in their knowledge may be, or if you got a great person who's doing it for you, and that gives you that peace of mind. I know that pastors are really looking after peace of mind when it comes to their taxes because it is so complicated. This is not something that they want to focus on. You focus on people, you're focused on the kingdom. You want to bring people into the fold of Christ, and you don't want to have to become a tax expert or a financial expert. So you want to be able to trust the professionals that you have around you. And I want that for you too. And so this is hopefully going to help you do that. So here's some red flags that your CPA doesn't get it. I'll just use Schedule C for your ministerial income. And the reason why this is wrong is because everybody else who's not a pastor, if they have self-employment income, they're going to be using something called a Schedule C. And that is the form on your taxes that is for small business owners, for sole proprietors, where you put your total wages, your total revenue, and then it prompts you for all your expenses. You take out all those expenses, you have a net income at the bottom, and then that automatically gets translated onto Schedule SE, and that's where you compute your self-employment income. Pastors, again, as far as I know, are the only occupation in America where you're self-employed, but you don't go through a Schedule C. And so, CPAs may be used to, it's like, oh, self-employed, Schedule C. We'll just do it that way. That's not the compliant way to do it with W-2 income. You have to go straight to the Schedule SE. All right. You're not self-employed. You get a W-2. This is true for literally everybody else except for pastors. If you get a W-2, then you're not self-employed, but you're a pastor, and so you're a unicorn, and so you're different. You do get a W-2, and you are self-employed. Both are true at once. And if they say this shows that they don't understand the dual tax status that clergy have. Housing allowance isn't subject to any taxes. This is not true because, again, your housing allowance is subject to self-employment tax. So if you've not opted out, you should be paying self-employment. This kind of response from your CPA could lead to undertaxation on the Schedule SE. You can't deduct unreimbursed expenses anymore. This is one of my favorites because this is a really nuanced, nerdy conversation that I can get into with other CPAs. Ever since the Tax Cuts and Jobs Act of 2017, and it got codified forever in the Big Beautiful Bill Act, they did a lot of great things for most people when it comes to income taxes, but they took away one thing, which is the ability to deduct unreimbursed expenses as an employee. So if you're an employee and throughout the course of your job, you incur expenses or mileage or something like that, you used to be able to deduct that against your taxes as an employee. You can't do that anymore. So that's probably why your CPA would say this. You can't deduct unreimbursed expenses anymore. And it's true for income taxes. However, remember, we have two types of taxation systems. We have the income tax and the self-employment tax. You can deduct unreimbursed expenses from your self-employment tax. That's still, and you can read the Schedule SE instructions. It talks about it specifically for ministers. If you have any unreimbursed expenses, even as an employee of your church, you can deduct that before it goes on to the Schedule SE. Right, so that's a benefit that your CPA should have an eye on. Just fill out a W-4 and you're covered. This is talking about tax withholdings. The W-4 is the form you fill out and you give to your church that tells them, how many people do you have in your family, how much do you want withheld for your taxes from your paycheck. And, for most people, this works fine. You just put in the information that they ask you and you give it to them and they're withholding on your behalf. But again, they're only withholding based off of your wages, which is your total compensation minus your housing allowance. And if you're paying self-employment tax, they're not going to be able to withhold enough in order to meet that burden, right? So your CPA, if you haven't opted out, should be prompting you on, are you making estimated tax payments? Because if you don't, then you could owe interest and penalties. And I don't know about you, but I don't want the IRS to get a cent more from me than is legally required. Okay, so I have an interview guide here. I'll have this up at the last slide as well, so you don't have to scramble to take a snap a picture of it. But this is the 5-question CPA guide, and we're going to go through these questions to help you vet your tax preparer. The first question is, how many pastors or ministers do you prepare taxes for? If they say several, I keep current, on clergy specific rules through continuing education, that's the green flag response. That's what you want to see. You want to see someone who this isn't their first rodeo. Red flag is none, but I'll figure it out. Now, this isn't supposed to be flippant. CPAs are generally very good at figuring things out. They have extensive training and extensive resources at their disposal to figure out these wonky tax situations that they've never encountered before. It's just that clergy taxation is not only niche, but it's counterintuitive. There's so many things about clergy taxation, and I, as a tax professional, can tell you that I would never have thought on my own to even go look for. Right? That's how counterintuitive and how different it is. And so to have a CPA say, I'll figure it out, maybe they will, maybe they'll be able to research it and get absolutely everything, but it's likely that they'll probably miss something. Clergy taxation is very specialized and assumptions are dangerous. You want to find somebody that you know what they're doing and this isn't the first time they're doing it. Question 2, how is a housing allowance reported on a tax return? Again, the green flag response is it's excluded from income tax, so it's not explicitly reported. This is a question I get from pastors all the time. Where should I put housing allowance on my taxes? It doesn't go anywhere on your taxes. It's an exclusion. So there's no place in the entire tax form where your $30,000 housing allowance is going to show up as a number. But it is subject to self-employment tax unless you've opted out. So on your Schedule SE, the number on there, I think it's line 2, should include both your wages and your housing allowance when trying to calculate your self-employment tax. It requires careful W-2 accuracy and Schedule SE calculations. Red flag if they say it's not reported at all, it's excluded from income. Again, it's a grain of truth, but you don't want them to underreport on your Schedule SE or miss W-2 errors. A big part of being a clergy tax specialist like I am is looking at what the church gave you and not assuming they did it right, because many of them didn't. I'm knowing what to look for on your W-2 to try to fix that with your church, and your CPA should be doing so as well. Question 3, are you familiar with the dual tax status of clergy? Easy layup question for someone who understands. Yes, ministers are W-2 employees for income tax, but they're self-employed for Social Security and Medicare. There's 2 red flag responses here, and again, this is because CPAs typically aren't used to dealing with dual tax status people. They're either, I use the Schedule C because you're self-employed, or I'll report it like a regular W-2 because you're an employee. You have to be able to do both seamlessly and understand how mechanically that works. Both of these approaches are, again, ignoring the dual tax status. They're just treating you as one or the other. Question 4, what do you look for to ensure my church issued a correct W-2? Again, this is something that CPAs may not be used to. They usually just take the W-2 and assume that the payroll company is doing it correctly because most of them are. The trouble is that ministers are so different, their W-2s should look different. And someone who's who knows what they're doing should be able to look at your W-2 and tell if it's correct or not. The green flag is I check to see that housing allowance is excluded from box 1, because that's a common mistake that churches make. It's properly reported in box 14, where it says other, your housing allowance should be in there. And boxes 3 through 6 should be completely blank. That's where it calculates your withholdings for Social Security and Medicare taxes. Again, you're self-employed, so those should be absolutely blank. Red flag, I'll just record what the church reports. They know what they're doing. And again, 99% of the time, that's usually the right call. But I've seen so many errors from churches that I make it part of my mission to ensure that W-2 is correct and that a correction is issued before I even touch the taxes. And then the final question, how do you handle unreimbursed ministry expenses? A green flag is unreimbursed expenses can be deducted from self-employment tax, but not from income tax. That is the fully nuanced response that someone who understands clergy taxation should be able to tell you. Again, 2 red flag response. If they're treating you as one or the other, they're saying, we'll just deduct expenses on Schedule C. If you don't have 1099 income, you shouldn't be doing a Schedule C. You should be, and this is part of the reason why it's so insidious that pastor taxation is so different and wonky. It doesn't get washed through the Schedule C first. And so you have to remember, or your tax preparer has to remember, to manually take out the unreimbursed expenses. If they're not getting prompted anywhere, they just have to know that they can do that. So that's something that a lot of them aren't used to. So they'll just say, we'll just use the Schedule C, not compliant if you're using a W-4. Or you can't do it. You just can't deduct unreimbursed expenses anymore because of the Tax Cuts and Jobs Act. Again, half true, but not fully true for you. All right, if your CPA doesn't pass the test, here are the options available to you. 1, you can educate them, share with them IRS Publication 517. That's where it goes through a lot of these clergy-specific things, and some of them will learn. I do consultations with CPAs as well, and a lot of them appreciate the opportunity to grow in their knowledge. Option 2, you can find somebody else. Find a specialist in this space, a CPA or a tax preparer who focuses on clergy. They do exist. You can learn it for yourself. With proper training, you can file your own return properly, and that is a resource that I provide. I do tax training as well for pastors who want to save some money and do their own taxes, and many of them do. It's just that you got to do it properly. So with one training, you should be able to get years of good returns. Okay, part 3, this is our shortest part. Some habits for next year. These are little things that you can develop in your day-to-day that will make things easier come tax season in April, hopefully. The easiest one is what I call the Sharpie strategy. This is a way to keep track of your housing expenses. So instead of going through all of your receipts and all of your bank statements and trying to figure out, okay, I went to Target, was any of that for housing? Let's look at the receipt. Okay, yeah, I bought some floor cleaner. Okay, let's take that part of it. This removes all of that. This essentially creates a set it and forget it system to where the record keeping happens on its own. And guess what that does? That frees up your time so that you can focus on ministry, you can focus on family, the things that are really important, and leave the record keeping to the robots, right? That's what we're going to try to do here. So here's what the system is. The first thing is you open a separate checking account. Checking accounts are usually free. This is going to be less complicated than trying to go through your receipts yourself. So I think a separate checking account for your ministry income, so deposit your church income into this, and then also to track only your housing expenses. And then you can connect it to your main family checking account, and you can move money back and forth as needed. So, your church income is going into this separate account. You can every week or every 2 weeks or every month, depending on how much margin you have, you can move extra money from this account into your normal family account. The second step is redirect all your monthly housing bills to pull from this new account. So we're talking like your mortgage or your rent, your utilities, your insurance, things like that. You're going to get a debit card for this account, and you're going to take a Sharpie and you're going to write housing somewhere on that card. You can get creative and you can draw a picture of a house, or you can, do what you want. But the whole point of it is to show you this is the card that I use for housing expenses and only for housing expenses. Don't write it on the mag strip or on the chip or anywhere on the signature or on any of the numbers, but anywhere else is fair game. Any of the real estate on that card. You can just make a little mark to tell you this is the housing allowance card, put a little piece of Scotch tape over it so it doesn't get rubbed off, and you're good to go. And you're going to use that card for all miscellaneous housing expenses. You do want to keep your receipts. The IRS still wants you to keep receipts for anything over $25, but just throw it in a shoebox or throw it in an envelope, and God willing, you'll never have to look at it again. That's only there in case you get audited. You won't have to go back and, again, fine-tooth comb it later with this system. And then finally, at year end, you print or you export all your expenses from this dedicated account, and there are your housing costs. Super easy. It's all in one place. You build up the discipline. It'll take you a month or two to get it second nature to you. And there are some other things you'll have to consider, like, if you go to Target, for instance, and you're buying floor cleaner and you're buying furnishings, but you're also buying groceries, and you're buying some things that are housing allowance eligible and some things that are not. I would get into the habit of just asking the cashier to make two separate transactions, right? So just put all the housing stuff first and be like, I'm going to use this card for this stuff, then put that little divider thing on the conveyor belt, and then put the rest of the stuff on there. You use your Sharpie card for the first transaction, and then you use your normal debit card for the other transaction. So that's my recommendation there. It keeps all of the expenses separate on the front end, and you're not having to stress about it come April. No apps, no spreadsheets, no special skills. Okay, and again, quarterly estimated payments, we'll go quickly through this. If you have not opted out of Social Security and you're paying your self-employment taxes, April 15th, June 15th, September 15th, and January 15th are the days that you'll want to go to the IRS website and also your state's website if you're in an income tax state, and pay whatever your income tax burden is. Simple formula, last year's total tax bill in April divided by 4, that's your quarterly payment. All right, and then I would set up automatic transfers to a dedicated tax savings account. Save 15% of every paycheck, and then once you get to one of these dates, all the money's there already. All right, simple record keeping system, just top level housing expenses. We talked about the Sharpie strategy. Keep the receipts in an envelope, but you'll never have to look at them again, God willing. And then you just print or export your year-end summary and give that to your tax person, or use it as you report your own housing expenses as part of the three-legged stool test. You'll get your tax documents from your church, of course, your W-2, any 1099s or cash income that you get. Hate to say, like if you get slipped some money for doing a speaking engagement or an honorarium or a love offering, that's technically subject to ministerial income tax and self-employment tax. So we should be reporting that as well. And of course, you want to bring your prior year return. Key dates to keep in mind. Put those quarterly tax deadlines on your calendar. And then in December or November, whatever your church's last board meeting is, you're going to want to request a new housing allowance every year, right? And the housing allowance webinar is going to be in November of this year. We'll get into much more detail about how to do that. And finally, the path forward, you want to understand that your tax situation is not like anyone else. Don't let anybody gaslight you into thinking, well, you're just an employee because you have a W-2, or you're just filing a Schedule C you're just self-employed. You have a very unique situation, and that's the reality of it. You want to verify that you're getting good help with the tax preparation services. Verify the 5-question test with your CPA. If they don't want to go through that with you, then that's maybe a red flag that somebody you don't want to work with. You can go through the questions yourself if you're filing your own taxes and use it to educate your own self. And then we want to simplify your life by picking a system that does the record keeping for you, such as the Sharpie strategy that I talked about, and use it consistently, right? Done beats perfect. Financial peace does not require becoming a tax expert. It requires understanding your situation and having the right support. All right, I'm going to put this up here briefly. Shepherdswallet.com/taxes. I have a number of tax things that I do. The most accessible is what I call a pastor tax review. This is where I look at your most recent return that's been completed, and I'll go through with a fine-tooth comb and let you know if I see anything that either looks non-compliant, and I'll also be looking for long-range optimization opportunities. I think it's well worth the money. If you want to learn how to file your own taxes as clergy, I also do tax mastery training. I also do full service tax prep. I charge market rates for that. I have a little boutique practice to keep myself sharp. I'm not necessarily looking to grow that, but if that's something that you're interested in, you can go to shepherdswallet.com/taxes. I have a form there where you can apply to be a full service tax client if you would like. And the promo code for today is TaxPiece26. It's 2026, so I'm giving you 26% off of any of the tax uh, any of the tax services on my website. Um, if you're watching this and you're a denominational leader, this is exactly the kind of education that I provide to pastoral networks. So covering your pastors and giving them this kind of guidance. We have cohorts, we have specialized tools, we have the free tools I've been talking about. We have kind of more robust versions of those. Video course libraries, things like that, to help bring your pastors up to speed with the uniqueness of their situation, so that through understanding they can achieve more financial peace. All right, let me take a look at chat and see what kind of questions we have. We have about 4 minutes here. Let me see. Okay, so can you expound on how changing housing allowance mid-year would work? Yeah, no problem. So what I would do is I would take my free tool. It has a place where you can estimate all of your expenses, find your fair rental value, and then once you do all that work, it automatically populates both a board resolution document and also a formal request letter that you can just print out and you can just give it to your board. And you should be able to do that at any point. You can say, from this moment on, I would like my housing allowance to be this, and hopefully the next paycheck should show the difference, right? And then from that moment until you change it at the end of the year, the new amount will be reflected. So let's just talk about hard numbers. Let's say your old designation was $20,000. You get to July and you've bought a new house, and now your housing expenses have doubled. You're up to $40,000. So you're up half a year with $20,000. So you've gotten $10,000 of that so far because you're halfway through the year. And then you go back and you give the board this resolution and say, hey, I would like to update my housing allowance to $40,000. And they say, okay, that's fine. And they start pulling out of the paycheck. And then for the rest of the half of the year, you've taken half of that 40,000. So you've taken 20,000, right? Because it's from that moment on. So your W-2 should show as a housing allowance for that year, 10,000 for the first half, and then 20,000 for the second half. So you should have $30,000. And then if you keep the same, it'll show the full $40,000 the next tax year. I hope that makes sense. Okay. My tax preparer argues with us every year that the housing allowance is hurting us since it is taxed at a higher self-employment tax amount. Can you help explain it simply? Absolutely. Unfortunately, you don't get to control whether you are self-employed or not. So your housing allowance does not determine whether you're taxed for self-employment or not. So again, this is a situation where your CPA is half right. It is correct that for most pastors at medium to low incomes, you're actually better off if you were paid as a secular employee. Um, the problem is that the IRS doesn't let you make that determination. If you're working as a minister, then that means that you are subject to the Self-Employment Contributions Act. Just choosing not to take a housing allowance, the IRS does not give you the right to change your tax status simply because you don't want a housing allowance. So the way that I see it is that the IRS is forcing you as a minister to take your pay as a minister, which means that you're going to be subject to self-employment tax. You're already being double taxed and you have no control over that. You might as well take the housing allowance to offset that as much as possible. That's how I would explain it to your CPA. And again, your CPA is half right, but it's not the full understanding. You don't get to choose whether you're self-employed or not. The IRS has made that decision for you. And helpful stuff. Thank you. Thank you for coming. Um, it's the driver. Thank you for being here. Thank you all for being here. I really appreciate you all here. Again, if you're registered for this webinar, then you are on my mailing list for additional webinars. I do them every quarter. So my next webinar is going to be in May, and that's going to be on retirement planning for pastors. And so keep an eye out. In a couple months, I'll start promoting that, and hope to see you in May for another free one. The CPA interview guide, those 5 questions, you can use that QR code that's up there, and you can download that for yourself. Go through it with your CPA. Again, it has the green flag and the red flag responses, so you are actually able to kind of parse out their response. You can send it in an email, let them, think about it. And again, if you come back with like a few red flag answers, it shows that they're not quite up to the level of understanding pastor taxes fully. you can help educate them, give them IRS Publication 517. You can download the slides to this in the description of this video, so you don't have to remember everything that I said here. The recording of this video is going to be at this exact same, address on YouTube, and it's going to be there in perpetuity, so you can come back and watch this anytime you want. You can have them talk to me. I do consultations with tax professionals and with financial planners to help educate them on what they can do for your situation, and help educate them on what they need to know. And if you're in the market for a new person, I can either help you learn how to do it yourself, or you can apply to become a full service tax client for me if you would like. um, I'm going to end by saying the system is genuinely complicated, so you're not wrong in thinking like, why am I stressed out, why is this hard? It's hard because it really is, and so my calling and my purpose with Shepherd's Wallet is to provide you with empowerment. I want to empower you as pastors to take control of your financial situation, and that starts with understanding what makes you different so that you can stand with confidence and with peace. You can email me if you would like, Seth@shepherdswallet.com. You can go to my website, shepherdswallet.com, and they'll have all kinds of resources there. I have a blog that I update regularly. I have a podcast that you can follow where I talk about a lot of the same kind of stuff. All of my tax services are there. My main part of my business is working with denominational leaders and providing this sort of guidance to pastors at scale, because the need is so great. And so, if you would like to give my contact information to your district minister or your synod leader or anything like that, and have them talk to me, I would love nothing more than to see if I can help you and your fellow ministers in your denomination to understand the situation and to be equipped with ways that can actually help you achieve financial peace. So, bless you all. Thank you for being here. And if you have any questions, you know how to get a hold of me. Bless you guys.